Alphabet stock is down nearly 25% from its 52-week high, and on today's episode, I want to explain where it could be in the next 5 years. Alphabet is the parent company of Google and one of the world's largest tech firms. Its core business spans through multiple segments. First is Google Services, which includes Google Search, YouTube, Android, Chrome, Google Maps, Google Play, and advertising sales on all those platforms. Next, we have Google Cloud, the massive AI infrastructure solution. And finally, we have a collection of experimental units known as other bets, which include things like Waymo's, their self-driving car vehicle. Now, this dominance has created a powerful competitive moat. Google benefits from immense scales, billions of users, to create unmatched data for ad targeting and strong network effects. Throughout this episode, we will discuss recent earnings, the bull and bear case, and so much more. So let's get started. Alphabet's latest earnings report came for their quarter one of 2025, and it shows strong financial performance, beating market expectations. Revenue for the quarter was $90.2 billion, up 12% year over year. This growth was broad-based. Google's advertisement business grew about 8.5% year over year to $66.9 billion, and Google Cloud revenue surged 28% year over year to $12.3 billion. Notably, all major product areas, search, YouTube, cloud, as well as newer areas like YouTube subscription and Pixel devices, saw double-digit growth, indicating healthy demand across Alphabet's portfolio. The only soft spot was the Google Network ads on partner sites, which saw a slight decline of 2% year over year, as some advertisers pulled back on third-party ad placements. Now, Alphabet's management provided very bullish commentary alongside the earnings. CEO Sundar noted that the results reflect healthy growth and momentum across the business, and highlighted Google's unique full-stack approach to AI as a key driver. Now let's understand the overall market. The key trend in digital advertising includes the continued shift of ad dollars from traditional media, TV and print, to online platforms. Growth in mobile advertisement, smartphones now command a majority of digital ad spend, and the rise of video and social media ads. The cloud market has another secular trend. It's very much in Alphabet's favor as well. There is still a large runway as many enterprises and governments have yet to fully migrate to cloud or are just in early stages. Even those already in cloud are expanding into more advanced services like AI, machine learning platforms, analytics, and multi-cloud setups. Now let's look at the bull case. First is the robust core advertising engine. Alphabet's dominance in search and online advertising underpins the bull thesis. Google's search engine processed billions of queries daily and held about 89 to 90% of global market share in search in 2024, a lead that provides a steady flow of interested users to monetize. Next is the expanding cloud profitability. Google Cloud is emerging as a strong second growth engine for Alphabet, and the bull case sees this business significantly boosting the company's financial profile. After years of investment, Google Cloud is now not only growing fast, revenue up 28% year over year as previously mentioned, but also profitable, hitting $2+ billion in operating income this quarter. Innovation is another place, and Alphabet is a massive AI leader. Alphabet has positioned itself at the forefront of major tech innovations, especially in artificial intelligence, and this is central to the bullish thesis. The company's investments in AI are massive, and its large language models are topping charts in performance. Next, we have the diversification and other bets optionality. While ads and clouds are the primary driver, Alphabet's bull case is strengthened by its diversified portfolio of services and long-term projects. The company has many lines of business that, although are not as large as search, contribute to an ecosystem effect and have room to grow. Then there are other bets. Ventures like Waymo's self-driving, Wing, drone delivery, Verily, which is health tech, and others, and one of these could be the next big thing. Next, we do have the financial strength and shareholder returns. Alphabet's financial foundation is extremely strong, which supports the bull case that the company can invest in growth while also returning cash to shareholders. Now, let's look at the bear case. The biggest concern for Alphabet bears is that Google's core search business, the foundation of its ad revenue, could be disrupted. The rise of generative AI and chatbots present an alternative way for users to find information. If users start relying on AI assistants for certain queries, they might bypass Google search and reducing query volume and ad impressions along the way. Bears also note competitive pressure in advertising beyond search. For product searches, Amazon has built-in advantage since shoppers often go directly to Amazon.com. In social media and video, TikTok's explosive growth is a threat to YouTube and Google discovery. Next is regulatory and legal risk. Alphabet's size and influence have made it a prime target for regulators globally. Bears emphasize that the company is currently entangled in multiple antitrust cases that could have serious consequences. Finally, is the overdependence on advertising. While Alphabet is diversifying, advertising still compromises of roughly 78% of its revenue in quarter one of 2025. This heavy reliance is a vulnerability if macroeconomics continue to deteriorate. Now, one big thing and key metric for investors. If there's one crucial factor that will shape Alphabet's future and that investors should watch closely, it's Google adoption of AI-driven shifts in search behavior. Search advertising is Alphabet's lifeblood, and it's being challenged and transformed by generative AI in real time. The company's ability to integrate AI into search without undermining its ad-centric business model is crucial. But luckily, Google has already introduced the search generative experience, where an AI summary appears at the top of search results for certain queries, and features like AI Overview are now reaching billions of users per month. The key metric to monitor will be how users engage and ad monetizations hold up as these AI features roll out. Now, my prediction on a 5-year outlook. Based on current fundamentals, Alphabet is likely to be significantly larger 5 years from now, driven by steady expansion in digital advertising, rapid growth in cloud services, and the incremental contribution of AI-driven products. Assuming Alphabet sustains a 12 to 15% top-line compounded annual growth rate, drives cloud margins higher, and secures modest multiple expansion, I believe its share price could climb to $260 to $300 by 2030, reflecting a 10 to 15% annualized return over the next 5 years. Ready to discover more promising investment opportunities? Visit fool.com/invest to get the top 10 best stocks to buy now. That's it for today. If you found this insight valuable, hit that like button, subscribe for more, and help make our community smarter by sharing your thoughts in the comments below. Stay foolish, and we'll see you next time.